Despite years of ultra-low inflation, the consumer price index increased by 9.6% year-over-year this year. In response to rising prices, the Fed hiked the federal funds rate 7 times, totaling a 4.25% rise. The established company, primed for expansion in the coming year, may be the sweet spot for 2023. Its expansion could result from a renewed emphasis on efficiency, pricing power, favorable trends, product introductions, or some combination of these factors. Hello everyone, and welcome to a brand new video on the channel. Today, we are going to talk about the top 5 stocks to buy in 2023. Before we get started with the video, don't forget to smash the like button, share the video, and subscribe to the channel. Now let's get started. Number 5. T-Mobile. T-Mobile has more than 100 million clients in the United States, Puerto Rico, and the United States Virgin Islands, and it offers voice, text, and data services to these customers. T-Mobile and Metro by EI Mobile, formerly known as Metro PCES, are the two brands that belong to this firm. As a result of industry leader T-Mobile's subscriber acquisition, the stock price of the company increased by 20% in 2022. T-Mobile's phone business is expanding at a rate that is higher than it has ever been 2 years after the company's merger with Sprint. The corporation is also making headway in its high-speed internet sector, which has added about 1.5 million customers year to date and is showing signs of continued growth. The revenue for the third quarter was up 4% from the same period the previous year, while free cash flow was up 32%. Because of the expenditures associated with the merger, which totaled $972 million, the company's net income for the third quarter was reduced by 26.5%, coming in at $508 million. The corporation is still in the process of implementing the plan for integrating Sprint. Mobile recently increased its guidance for the merger synergies to reflect the fact that work to date has been completed ahead of schedule. Prior to this, the business had predicted that the combination would result in cost savings of between $5.4 billion and $5.6 billion. The most recent estimation is between $5.7 billion and $5.8 billion. Moreover, T-Mobile has announced that its 5G network is now available to 323 million customers. This includes 260 million people who are covered by T-Mobile's 5 network, which is called Ultra Capacity 5G. T-Momentum Mobile's future can only benefit from having more coverage and faster speeds, as well as competitively priced plans, low customer attrition, and an investment-grade balance sheet. The average analyst projection for T-Future Mobile's share price is $177.87, which is a 25% increase from the company's current share price. Number 4. Eli Lilly. Eli Lilly is a pharmaceutical business that researches and produces essential new therapies for a variety of conditions, including diabetes, obesity, Alzheimer's disease, abnormalities of the immune system, specific malignancies, and COVID-19. The company uses wholesale distributors and enters into marketing relationships with other pharmaceutical businesses in order to distribute its medicines in every region of the world. The rise of 31% in Eli Lilly's stock price in 2022 is an anomalous bright spot in an otherwise gloomy market. The launch of the company's treatment for type 2 diabetes, Mounjaro, during the third quarter was beneficial to the business, as was the expansion of sales of other drugs such as Verzenio for breast cancer treatment, Trulicity for diabetes treatment, and Emgality for migraine treatment, among others. In the third quarter, the pharmaceutical company's revenue increased by 7% when measured in constant currency terms. A non-GAAP basis revealed a 12% increase in earnings per share for the period in question. As a result of Lilly's robust product pipeline, most industry analysts anticipate that the company's recent success will only continue. Before the year 2023 comes to a close, Lilly should introduce 4 additional products in addition to a new key indication for Mounjaro. Donanemhaba is a medication for people with Alzheimer's disease who are in the early stages of the disease. Anat Ashkenazi, Executive Vice President and Chief Executive Officer of Lilly, believes that the product portfolio can maintain top tier volume-driven revenue growth through the year 2030. The business anticipates sales in the range of $30.3 billion to $30.8 billion and non-GAAP earnings per share in the range of $8.10 to $8.30 for the year 2023. Both of these ranges demonstrate growth from the results that are anticipated by the end of the year 2022. Revenues in the range of $28.5 billion to $29 billion and non-GAAP profits per share in the range of $7.70 to $7.85. There is a dividend paid out by Lilly, and it yields roughly 1%. Each of the past 8 years has seen an increase in the dividends that are distributed to shareholders. The company has achieved an approximately 15% annualized dividend increase over the past 3 years. In comparison to its current price of around $360, the average price objectively placed on Eli Lilly is approximately $378. Number 3. Dollar General. Dollar General is a well-known chain of bargain stores that are located in convenient neighborhood settings. These stores sell basic consumer goods at competitively low rates. With well-known brands such as Clorox, Procter & Gamble, Coca-Cola, Kellogg's, and General Mills, the corporation also sells its own private label items. There are over 18,000 Dollar General stores spread over 47 of the 50 states in the United States. Even though the US Step 500 index has dropped over 20% this year, shares of Dollar General have increased by 3%. Throughout the course of this year, the chain has reported gains in both the number of customers walking through the doors as well as the average amount they spend at each transaction. Yet, Dollar General is beginning to feel the effects of the pressures brought on by increased costs. In response, the management of the organization is concentrating its efforts on simplifying its supply chain. These measures to increase efficiency will not only help with the current upward trend in inflation, but they will also have long-term benefits. Around this time, Dollar General is expanding their business in order to sustain their growing income. The 11.1% revenue gain in the third quarter of 2022 was brought about by new shop openings in addition to a 6.8% increase in same-store stores, which was largely offset by store closures. Despite some constraints on the gross margin caused by rising product costs, the net income for the third quarter increased by 8%. Dollar General is committed to providing its shareholders with a positive return on their investment by way of dividends and share repurchases. The total number of shares that were repurchased by the firm during the third quarter was 2.3 million, and the corporation still has $2.5 billion left on its share repurchase authorization. The dividend yield is approximately 0.9%, which is not exceptional when compared to other companies, but the annualized 3-year dividend growth rate of Dollar General is greater than 13%. Dollar General benefits from the current state of the economy. The patterns of increased traffic and higher average transactions should continue, even if the economy remains in the same position or gets worse in 2023. In addition, the business anticipates opening 1050 stores in 2023, with 35 of those locations located in Mexico, up from its current price of around $248. The consensus price objective for Dollar General is $265, which represents an increase. Number 2. Chipotle Mexican Grill. More than 3,000 quick-service restaurants, including tacos, burritos, and bowls, are owned and operated by Chipotle, which specializes in offering food that is created to order. The chain is represented in the countries of the United States of America, Canada, France, Germany, and the United Kingdom. Every one of those places is owned by the corporation. Since the beginning of 2022, Chipotle stock has experienced a decline of almost 20%. The restaurant business has been coping with the same headwinds that are putting strain on the food budget of your household: rising prices on dairy products, avocados, and tortillas. Also, there has been an increase in the price of packaging. Despite this, Chipotle's costs for food, beverages, and packaging as a proportion of total revenue fell by 50 basis points in the third quarter of the current fiscal year, compared to the same quarter of the previous fiscal year. This is conceivable because the chain possesses pricing power, which allows it to raise menu prices in response to an increase in operational expenses. It remains to be seen how far Chipotle can push the cost of its menu item. CEO Brian Niccol has stated that while they may be losing some customers with lower incomes, they are also attracting clients with greater incomes into their homes. Chipotle also keeps opening new restaurants, many of which are designed in the chain's signature drive through a model known as Chipotle. The combined effect of these expansion initiatives and pricing hikes led to a 13.7% rise in revenue for the third quarter compared to the same period the previous year. The margin of operations saw an improvement as well, going from 12.3% to 15.1%. The adjusted diluted earnings per share for the third quarter came in at $9.51, which was 40 cents higher than what market experts had anticipated. In 2023, Chipotle could face difficulties if inflation persists at its current rate. But the chain has shown that it has price power and it has a lengthy runway for expanding into new geographic areas. The management anticipates opening anywhere from 255 to 285 new eateries the following year. Now, Chipotle stock trades for less than $1,500, and the average price objective suggested by analysts is approximately $1,775. Number 1. Amazon. You are probably familiar with Amazon in its role as a massive online retailer. You might not be aware of this, but Amazon does much more than just sell goods over the internet. Amazon is the company that offers cloud computing services to the most customers worldwide. The Amazon Web Services platform currently holds a higher share of the market than either the Azure platform from Microsoft or the Google Cloud platform from Alphabet. Amazon provides storage and fulfillment services to third-party sellers on Amazon.com, for which it earns commissions and also generates revenue. Amazon Prime, Kindle Unlimited, and their other subscription services all contribute to the company's overall revenue. The e-commerce giant has also invested in traditional retail outlets, such as the Whole Foods market chain, which it acquired in 2017. The year 2022 has been a difficult one for Amazon. Until the conclusion of the third quarter, the corporation's global e-commerce operation had incurred losses of almost $8 billion. Even if the high-margin section is lucrative, growth in that segment slowed in the third quarter and fell short of what analysts had anticipated. In addition, the firm stated that they want to terminate the employment of up to 20,000 workers across all of their distribution locations, divisions, and executive personnel. The encouraging news is that although 2022 will be difficult for Amazon, 2023 will be much better. For one thing, comparing the profits will be less difficult. The most essential thing that the CEO Andy Jassy is concentrating on is simplifying the organization's cost structure. Amazon invests a significant amount of capital in businesses that do not generate a profit, such as its international and devices divisions. The emphasis placed on efficiency ought to pave the way for strategic shifts in those domains, in addition to cost reductions in continuing activities such as package delivery. In addition, Amazon made its first common stock repurchases since 2012 in the year 2022, spending billions of dollars to do so. The corporation has a share repurchase authorization that can be used to buy back up to $6 billion more shares. Continuation of share repurchases would provide support for increasing earnings per share in the future. In addition to these aspects, Amazon's stock price appears to be attractively priced right now in comparison to its past. Amazon shares are now trading at less than $90, but analysts have set a price objective of approximately $140 for the company. That's a wrap on the video. I hope you liked it. If you did, let me know by giving it a thumbs up, and do not forget to subscribe. Thanks for watching. See you next time.